Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I am delighted again to be able to speak to CEO Adam, Minto and CFO Andrew Clark of Revolution Beauty, a fast-growing, in fact, after yesterday's interim results, a very fast-growing, affordable cosmetics and personal care brand. So welcome, gents.
Nice to see you again, Paul. Pleasure to be back.
Good to see you, Paul. Well, lots been happening since we last spoke a few months back. Say not least yesterday's excellent results. But before we sort of dig into the details, Adam, I don't suppose you could quickly remind investors of Revolution Beauty's sort of like key USPs.
Sure. Well, I guess simplistically, we're a modern beauty brand that's a fast-growing global beauty challenger into the beauty world. So if you remember, and your followers will maybe recall from our first meeting, the beauty world is dramatic and fast-growing, over $280 billion globally. And most of its world is controlled by the big corporate players, Estee Lauder, L'Oreal, Coty, and so on, Procter & Gamble, Unilever. And most beauty brands will start with a founder, they will grow and then get sold. What Revolution Beauty is trying to do is very different. So first and foremost, we are cruelty-free, vegan, we are authentic. So we use social media in a really positive way to promote really good mental health and how consumers should be improving themselves. So social media, as you know, sometimes has a bad name. We use it very positively, a zero retouch policy. We believe in inclusivity. We have a shade for everyone, so 50 shades rather than light, medium, and dark. And then we offer transparency. We take out marketing in a traditional format from beauty. So we could produce incredible premium quality at accessible prices for the consumer, and we make them available globally. So we sell everything direct to consumer on revolutionbeauty.com, now fulfilling globally out of the USA and Australia. And then we work with the best of the best we see it digital partners, so whether it be Beauty Pure Play like Look Fantastic or Beauty Bay, and those around the world, or fashion partners which are fast growing such as ASOS and Zalando, and then finally the best of the best bricks and mortar partners. So we're in 45 countries around the world. You'll know us from Superdrug and Boots in the UK if you're followers from the UK, but Ulta, now Target in the US, and 45 countries. We're now not only makeup, so we're makeup, skincare, and hair care. And I'm sure we'll talk about our new categories in this conversation. So that's us. That's us.
And just on that, I mean, what's been driving then this sort of like the 39% like-for-like growth in the first half? I mean, obviously it resonates the brand with a lot of people from the values you've just talked about. But you could just talk a bit about how you've sort of like increased the distribution footprint and made a success so much of the D2C.
Exactly. So Revolution Group to market is, again, I think pretty unique. So we launch everything direct to consumer, and we believe that's growing just as a concept for the consumer, clearly, as well as the much discussed elements of how digital is everything going in the world. We should probably chat about that call. So revolutionbeauty.com is now fulfilled locally on 3 continents. So rather than trying to ship our products out of the UK around the world to 100+ countries, we are now fulfilling out of the US and Australia, and next year we'll be filling locally within Europe. So that's at the heart of us. Importantly also, Paul, it allows us to get the right data of what the consumer is, test and learn, and launch trends fast, and then explode those trends. So then we reach the rest of the fast changing digital world in platforms. So whether that's ASOS, Zalando, and that is really moving death of the department store. So that growth is driving really firmly. Beauty is being shocked, whether it's Amazon or whether it's ASOS or Zalando, hugely, very, very differently than 3 years ago, than 5 years ago. And then finally, store groups that we enter. So Revolution went around the world, picking one retailer in each country, over 50 countries now. And now, with great care and attention, we're adding second and third retailers. So what's driving our growth this year, Paul, is a monumental growth in the US market. We successfully launched in Target in February. And when you have a launch, a bit like a new product, you wonder whether it's going to sustain. Well, those sales results have got even stronger as the year goes on. So that's what's driving our growth. The return of stores. So remember, last year, stores were massively affected and everyone wondered whether they'll ever be able to come back. But we've seen huge growth, return to growth in the UK and most of Europe internationally as well. And of course, that US shopper has really bounced back to stores. So that's really what's driving our growth. And then finally, the sustained progress in our new categories. So makeup has been challenged. Makeup has been challenged by people not being able to date, go to work, go to dinner, go to dance. And now that's started to come back in the first half of the year and rapidly increasing now. But it's the sustained growth of skincare for Revolution, the sustained growth of hair care for Revolution. So that's really what's driving our growth. It's a really confident first half for us. What's equally exciting is how we're heading through the second half. We're obviously deep into that right now. You know, these were our results that ended at the end of August. So September's continued to build, Paul. October's got even stronger, and we're seeing fantastic results as we talk today in November. So great confidence of returning of the consumer as well to beauty. The beauty world has been tremendously resilient, but of course with stores turned off, there was a question mark. It went to digital, but now you've got all of those factors firing on all cylinders. So I'm really, I'm really confident about the beauty return. And of course, we know this market's only getting bigger for the consumer.
Yeah, well, it certainly seems as though the magic formula is working with the consumers sort of like going buying the stock hand over fist. But can you just quickly talk about what the key USP, the key differences between the innovation cycle between sort of like, let's just say, for instance, you're a L'Oreal. Just typically, how long does it take them to bring a product to market, test it, refine it, and distribute it compared to you guys?
Yeah, having supplied those guys, as you know, my background was supplying these type of guys, 32 years in the industry. They, principally speaking, they're marketing led, they're big bet led. So they will develop products over the course of 18 months to 2 years, sometimes longer, and get them ready around the world and go for the big marketing push. That remains the same. Broadly speaking, those groups are dropping products no more than 4 times a year, and it's an 18-month to 2-year cycle. Now, of course, they're trying to speed up, but the colossus of their business marks against them. The big bet and replacing that big bet is a real challenge to wean themselves off. Revolution relies on little bets every week and then explodes them. So every week we launch new customers in a test and learn strategy direct to consumer. We then build out with those digital partners to see how their consumers are loving them. And then we purposely build into in-store. So it's a really considered, careful, yet exciting little bet, because it allows us to take sometimes more risks. So we can actually test something that might be very new to the mass customer, see if they love it, look at the data, and then build. But back to the cycle, we can launch a product from an idea in 12 to 16 weeks direct to the consumer. And that's our single biggest difference. Wow. Effectively, speed and little bets every week, building confidently. And that's where our sales results come. You launch a new product digitally, you test, you learn. In self-tanning, Paul, we've just done it. So we've tested and refined online, then worked with our digital partners such as ASOS, considered everything, and now we're going forward into over 1,000 stores in the UK next year. So that's a safe little bet, building into a confident distribution growth. And I think there's not many people doing that in the world at scale. And it's a really authentic way to build into what the consumer is looking for, which, is always changing, but we can do it with a lot of confidence. So we take a lot of risk out of the beauty industry in our model.
Yeah, and I guess that's probably one of the reasons. I mean, not only takes risk out of your particular business model, but also your distributors. And that's one of the many attractions, the large, big retailers, because they haven't really got to sort of like say, well, 18 months on, I don't know whether this product's going to sell through, because you've already tested it, haven't you?
We'll take Target and Boots as an example. So it means as we enter this huge new distribution in our Q4, our fiscal Q4, which is, just to be clear, November, December, January, February, we've got really confident growth because in the US market, as we walk into our new retail distribution. So we announced today 2,800 new stores in the US, 2,800. Now, we're able to do that because we know what is selling now to the US customer on our digital platforms. We know what is selling in Target, our existing US retailer, and we're able to work with the retailer. They know their customer well in their stores and put the right selection of products, which gives everyone. You're probably talking about that decision today being very important to Revolution in this fiscal year, but a further $30 million worth of revenue growth next year, really confidently done. That's kind of the same with Boots. We've built phenomenal business with our great friends and partners at Superdrug. But then what we're able to do with Boots is take an edit of that success and put it in a great amount of focus in the right stores in Boots. Again, a confident decision. There should not be that risk of, is it going to sell? Because it's based on data and it's based on real facts. So it takes a lot of the risk out of our growth. So it means that we're propelling ourselves really forward confidently, allows us to explore different things in little trends quickly. So the other part of our mind can go, okay, I've got this crazy idea about soap. Do you remember we talked about Soap Styler? Soap brows for our consumer. It allowed us to test it well and then blow it up into our distribution. So I honestly think that's our model that is really allowing us to grow exponentially. Yeah.
Brilliant. Okay, Andrew, can you just now take us through some of the key highlights from the first half results? As
yeah,
like, you know,
sure.
just
Yeah, so we reported some really good results. We're really pleased with them. We reported top line sales growth of 39%, adjusted EBITDA also growing 39%. So the sales growth and the profit growth moving in line. And I think when we look at the sales growth, it's really broad based. Actually, that's probably one of the things that we're really most encouraged by. So Adam talked about the expansion in the US. Well, our North American store businesses are up 100% on last year as we've expanded into Target. In our home UK market, we're up more than 75% as the customers have returned to store. And in the rest of the world, in our store groups, we're up more than 50%, a little bit slower than the UK and North America, but that's because in those markets, COVID restrictions lasted a bit longer, particularly in Australasia, as everyone will know from looking at the news. So across all of our store groups, really good momentum. And then in digital, a little bit backwards on last year, but that's to be expected because last year everyone was at home and not able to go to the shops. But on a 2-year basis, up 50% versus 2019. So really good sales momentum across all 4 of our channels.
And how have you managed to sort of like keep the gross margins and the EBITDA margins relatively stable, given it's a high inflation environment and freight costs have gone through the roof?
Yeah, we've been working really hard. So actually probably the number that I'm most pleased with is that our gross margins for this half are actually slightly better than the same period last year. And you're right, yeah, freight costs have been unprecedented and we're working really hard to offset those in the first half. And what we can point to is that as we're launching new NPD, that is margin accretive. As we're launching into new second and third retailers, they're also delivering better margins for us. So there's a lot of hard work that's gone into maintaining the margin year on year, but we're really pleased about that. And as we look into the second half, there's more to do. But yeah, really pleased with H1.
And the actual top line growth of 39%, how much is that coming from volume and how much from price? I'm guessing majority on volume.
Yeah, it's not by price. You know, the Revolution's an everyday right price model. So we're not changing our strategy. We haven't changed our strategy last year and this year about promoting any more outside of the normal pattern. So, you know, all of our products that we launch are at the right price to the consumer. Obviously, with some of our retailers, we naturally form into their promotional plans and support them. But yeah, we're not heavily discounting. We're not overinflating the price to then knock it down. So yeah, really, and no acceleration of that promotional thing in the marketplace. So particularly for brands, I've seen prestige brands suffer, Paul. I think the more expensive brands have had to promote a lot more. I saw some staggering things this week week on Black Friday week for some prestige brands, even prestige brands up to 80% off. So there's some issues in the marketplace. And I wouldn't say we hope for this, because I hope for a really fantastic ecosystem within the beauty industry. It's important that there is that good, better, best, but there's no doubt that prestige brands have struggled to react to the digital world, that balance. They obviously were in non-essential retail, so I think they're facing that urge to try and get back sales, and they are really promoting very aggressively. And there's some shockers out there. I think you'll have seen over the last year, even the great Estee Lauder shutting some of their brand portfolio. So we're talking about a right sizing of beauty industry. I think the consumer is buying digitally, but loving stores back open. So there's this omni-channel balance, and that's good. And then there's this prestige to mass balance. You know, consumers don't just want to shop prestige, they want value as well. So a bit like it happened in the fashion world, people might have an expensive handbag and shoes and have Zara dresses. That is continuing to happen in beauty. So as we look at someone like ASOS or Ulta, the consumer is still shopping maybe some prestige, but coming into mass for their core. Why would they spend that amount of money on a lipstick? They might want a foundation of that higher price because they love that foundation. And why would they buy that expensive mascara now when they use it so much and they can get great value from Revolution? So all those shifts are coming, and I think the beauty industry has been totally resized in the last 2 years and is about to get even more resized, digital and right quality at right price.
Sounds as though you're educating the consumers, which is good. Now, Andrew, just in terms of the supply chain, how are you managing the sort of like making sure you don't sort of have a stock out? If Adam's selling everything that we can make, how do we make sure that we have sufficient product to be able to sell, particularly through Black Friday and the Christmas gifting season?
I think one of the things that you'll see in the numbers is that we deliberately brought forward our stock into the first half of the year. So Adam and the operations team could start to see there were some pressures in supply chain and pressures on getting product into the UK. So we deliberately brought forward. What that means is we're now completely sort of wrapped and stacked to fulfil all of the supply chain challenges and the demand from our global consumers and retailers. So we've deliberately brought forward, and that means when Adam talks about the future growth opportunities in H2, if the stock is ready, there are no availability issues for us at this point.
Yeah, that's the way. I think the world has talked a lot about supply chain, and the market, that you talk about, Paul, has been really fearful of what supply chain challenges. In truth, there's two problems with supply chain. Length of time being the most important one that is not being discussed enough. So shipping times to get products around the world have quite literally doubled. But Revolution saw this coming a long time ago. And as Andrew said, we've got our stock planned. It's what we do. We come from a product heartland. So that's been quite simple for us to do. We will not miss a product availability for our consumer or our retail. In fact, our service levels are the best they've ever been in our 7 years. So that's really good. The second problem of supply chain has been inflation. Well, again, inflation actually in product cost, Revolution with economies of scales and knowing how to make stuff, again, is really competently controlling that. The third thing, which is the rock and the hard place, is shipping cost. Now that is unavoidable. So it is true, as we've said before, Paul, that shipping costs have grown exponentially. They started really in July and then have got to extreme levels in August and September, $3,000 a container to $20,000 a container. Now, that's extraordinary. However, we are seeing that peak, and there are now opportunities open for us to resize that cost, and we're exploring them right now. So I've got much more confidence about how to deal with that shipping cost in my business and right size it. And I think really genuinely, these supply chains issues have been confused in the marketplace. Revolution is really competently deal with it. You can see that we mitigated that in our margin in our gross margin in half one, and we're confident about it for half two. Now, belies that is we would obviously have seen margin progression happening in half one. We are unable to deliver that surprise to the market right now, but we're confidently mitigating it in half one, and we believe in half two. So it's a confident approach from us. It's extraordinary. We're having to work very hard, as you would expect us to, as every investor would expect us to do, but a high degree of confidence in continuing to mitigating these extraordinary costs. And then in the future, what we'll see with control over that shipping cost, a normalization effect. It means that you'll see margin growth. I remember you and I talking about those dizzy heights that L'Oreal operate on.
Yeah.
Well, for sure, you will see, as shipping cost is able to be mitigated in our business and then controlled on a downward level, you will see that underlying growth that we see in margins coming through in the bottom line for us. So yeah, I think it's been an extraordinary year. I call it long COVID year. Nobody expected these shipping costs to get so extreme. There's no issue on availability for Revolution, tick. And we've done a great job of mitigating half one. We believe we're going to do that in half two. And yeah, long-term aspect is gross margin growth for us in future years.
And Andrew, I guess, was the recent acquisition of Medichem also sort of like part of that supply chain resilience and margin improvement story?
Yeah, 100%. So Medichem was or is our largest sort of skincare and hair care provider. So vertically integrating that acquisition into the Revolution family was absolutely the right thing to do. It'll make skincare and hair care even more profitable than it is now. And also what it does, it gives that certainty of supply. And of course, as we move and sell more skincare and hair care anyway, that's all manufactured in the UK. So there's not that added cost we have to think about in terms of bringing it over from the Far East. So absolutely the right thing to do. And we're excited to integrate the businesses more as we move forward.
And then in Q3, Adam, what have you seen trading so far? And as you go into this festive season, I mean, it sounds as though you're pretty encouraged by demand.
Yeah, I think Q3 has been the first quarter in the last 18 months that normal patterns of life have shown through for the consumer, and that's what it's about. Every brand, every company needs to forget about the rest of the noise and focus on the consumer, which is what we do. So there's a pattern of life happening. It started with back to school, back to work, being able to, Paul, go to dinner, date and dance, as I've said before, and we've really seen that. So makeup really strongly back. It started in September. Huge Halloween. All of our metrics in all of our countries saw a phenomenal Halloween. Beauty makeup is huge at Halloween for its creativity, its looks, and people going to parties or expressing themselves. And now, as we've entered into November, it's been really interesting. I think the world of e-commerce was worried about delivery networks falling over. They were worried that would there be enough postmen, would there be enough DHL to cover? And of course, the industry had been taking this seriously through all of lockdown. So we're not seeing any severe strain on delivery networks, but equally, we've seen the world not being able to deliver a big November because the consumer is not ready. So what's really exciting is Black Friday is going to be huge. We're seeing that now. So as we speak, we're in the big week now. Last week was fantastic. The consumer is now buying beauty, buying Black Friday. So we're going to have a tremendously successful Black Friday. It's Wednesday. Black Friday is Friday. But I'm seeing a really confident growth. And then some key areas about Christmas. You mentioned seasonal. So one big highlight is the customer ready for Christmas? Well, what we can see now is they are with the beauty calendars and our Christmas gifting. So beauty calendars have become a bit of a phenomenon, Paul. People swap from buying chocolate calendars into beauty calendars.
These are advent calendars, are they?
These are beauty advent calendars.
So every single day they open up a sort of a lipstick and mascara.
Yeah.
Really?
Yes, there's 25 days, as you would expect. You remember as a child, Paul. Do you remember that far back, Paul?
No, I don't know. But what do you get? Okay, so what do you get for Christmas Day then? What's the biggest prize?
Well, the biggest prize is a brand new, exciting eyeshadow palette. It's the biggest value in it. So it's, and for us, for Revolution, it's about £80 worth of value for £40. Obviously, we can construct our cost mix to make sure it's very, considerably profitable for Revolution. But we create that value for that customer, he or she has got 25 days worth of surprises, and they get to build a look, they get to experience our new categories that they haven't, whether it be lip and mascara or brushes or skincare, and it's fantastic. It's a really exciting thing. And yeah, we started the journey in 2015, and it's got bigger and bigger and bigger, and back to normality for our consumer. This year is bigger than ever. So we had a 27,000 wait list for our calendar, and we are currently trading 45% up year on year, and we will sell 300,000 advent calendars globally to our consumers this year.
At £40 each?
Yes, at £40 each.
Okay, that's about £12 million worth of advent calendars.
Well, some of that is shared, of course, with our retail partners.
Yeah,
so there's
okay,
what we
gotcha.
sell. Yeah, so obviously we share that retail with, you know, our retailers in US and the UK.
Fabulous.
But it's a phenomenon, and I think we had a study that came to us this week that we are the second most popular beauty calendar globally. So it's fantastic for us. And back to that beauty calendar bit, people are giving them. So effectively, the way that I think about things is people are receiving them, and they might be new to Revolution, and that's fantastic because they're receiving Revolution brand, they're getting to experience it for the first time. It's customer acquisition, Paul, and that builds. So it's really built our brand. Gift and Christmas advent calendars being part of the way, and no surprise, we find new customers coming back to us each year and grow our business each year.
And just quickly on that, Adam, when you get a new customer, typically, how many of them stay with you, are loyal?
Oh, it's really different. It's a difficult question to answer, to be honest, Paul. What we know is that I'll repeat on our own website. So it's very difficult to look from market data, apart from we're growing in all our retailers. But yeah, it's difficult to say. You know, as you know, lots of different companies track it differently. We know that we added over 200,000 new customers in terms of new customers to revolutionbeauty.com alone in H1, and that's building even more strongly in H2 already. In terms of the typical shopper habit, our most addicted customers are buying from us 3 to 4 times a year, very similar to levels that Ulta and Sephora will buy from. So we know we're over delivering to those. Generally speaking, an active customer is buying from us twice a year. But of course, as we build into more frequently used products, so skincare and hair care, it's getting bigger. So what I'm really excited about is our new categories, because you use your skincare, your hair care, and now our new categories faster than you do maybe an eyeshadow palette, for example.
Agreed.
So it's actually getting bigger, and our skincare retention levels are obviously much more than our makeup ones because the usage is faster. You know, people are using our skincare every day. They're obviously using our makeup, but the time of usage is longer, for example.
Yeah. And then Andrew, just in terms of you're going to have a big Black Friday. You're going to have a huge Christmas as well. How much visibility do you have into the second half? Because the only curveball is obviously a bit of Europe, isn't it? Which I guess is just something that you can't control. You just got to manage.
Yeah, it is. Look, I'll let Adam talk in a second about the new growth opportunities that are coming at the end of our fourth quarter. But you're right. The only thing that is somewhere that we don't have immediate visibility is what's happening on continental Europe with COVID. And in truth, if we'd been speaking to you a week ago, we probably wouldn't even be having this conversation. So it's moving in real time, but it doesn't detract from the structural profitability of the company. But in terms of new opportunities, I'll let Adam talk about the exciting announcements that we made today.
Yeah, so look, as you know, Paul, our year end is the end of February. So let's get down to it. We announced today a phenomenal growth, which is locked and loaded, and we have the product. So contract signed, locked and loaded with phenomenal, very sensible, well thought out, negotiated growth with the right products going into the right distribution. So that is more Makeup Revolution into the US. We announced previously more Makeup Revolution going into Boots, cautiously, sensibly, and confidently expansion. That is millions and millions of pounds in this Q4 coming, locked and loaded, and it is huge growth being replenished in next financial year. We have that confident expansion of Hairplex into international distribution that is going into the US, Poland, Turkey. People forget how global Revolution is. Poland, Turkey, and Germany. And now we're also doing it in our tanning categories. So all of that is stable. As Andrew reports, I think US and UK sales are on fire, and we're having a great November, and we see the signs of a great December. The caution is COVID, the return. Is it done yet? Yeah. Whatever the world is. Now, I am incredibly confident as I sit here today on all of those metrics right now, but as the last 18 months has proven us, expect the unexpected. In terms of a business and how we're running it and the long-term trajectory of the business, it's fantastic. Caution on what as Boris said, what happens in Europe, will it wash up on our stores? And of course, we are in 500 Austrian stores, we're in 1,200 German stores. So we're already mitigating that because we're not silly. We've seen this coming in the last 2 weeks, and it's just an eye on, will it get even bigger, and will it will it go across more European countries and indeed to the UK. We can't fight against those extraordinary challenges, but what we can do is keep moving forward confidently as we go. So yeah, I think we have seen over the 18 months the transfer to digital. That certainly happened in the original pandemic. So again, we are seeing Zalando sales in Europe build really strongly because they have that digital. So if that customer doesn't want to come to store, he or she is buying it digitally, and we are seeing a big uptick in German, France, and other international sales on revolutionbeauty.com. So, if stores slow, will digital take over? Well, it's happened before. So it's, ask us in 2 weeks, Paul.
Okay, I will do. No, but looking a bit further to the right, if you sort of like take a longer term view, say in 5 years, where do you hope the business is going to be? If you put all that together, Adam, in terms of if it's going to do sort of like just south of 200 million turnover this year, how much where can you see the business, say, I don't know, in 2026, 2027?
Oh, I have even more confidence about the model than I do, and then I've got the wind beneath my wings as the distribution in stores have been held back by pandemic. So there's kind of a double whammy coming. I am even more confident, as you know, Paul, in my vision and our path. I can literally see our path to 500 million now with our expansion, and I believe we're building a total beauty business. So the thing that I'd love our investors to think about, and we've talked about today to our big investors, is really as follows. The total Revolution now, or we're complete at the end of this financial year, to be a total beauty company. So what do I mean? We're strong in makeup. We're strong now in skin and hair care. Tanning is proven now. And we now launch before the end of the year our fragrance category, our derma skincare category, our beauty ingestibles category, and then finally Revolution Man. So that will mean we have the full category in a similar way as a mini L'Oreal would have. And we actually have the route to market. We have the route to market with revolutionbeauty.com, our digital partners, and our existing retail platform. They're all onboarding these categories with Revolution. So that's our path to organic growth. When it comes to our platform, what Revolution has done is this fantastic heavy lifting. So we have a phenomenal team, Revolution. Your followers are now meeting Andrew, but it goes way beyond our senior team into a phenomenal 400 amazing people in Team Revolution. We have that operational infrastructure and excellence of an FMCG company. So we have B2B on 3 continents already, D2C on 3 continents. So again, we will be moving purposely into Europe with our B2B and D2C next year. So we're looking now to leverage that platform, Paul, and that's going to come from an incubator strategy with the next beauty founder and acquisitions beyond Medichem into brands. So, we're looking at them now. We have absolutely both eyes laser focused on Revolution brands, but we're now exploring the opportunity to add new brands and new founders into our platform, and that will propel our growth beyond that billion level that I talked to you about before. So it's even more clearer for us, I think. And the wind, at some point will be behind us or be on our backs with COVID at some point. Who knows what Europe is going to pass on around the world. But the long-term growth of this business is phenomenal. We're building the next beauty powerhouse, and I've got more confidence today than I did at the IPO, Paul. So yeah, exciting progress from Team Revolution.
Well, if you need anybody to sort of volunteer to do some market research on your man's range, then give us a shout, because I'll try some lipstick out if you need it.
Yeah, I'm not sure you're my perfect demographic in stage one, but I'll have a product for you, Paul.
Yeah, well, my wife says I'm certainly not perfect. But Andrew, then just finally, what is the sort of news flow going for? Is there going to be a sort of trading update after Christmas or something like that? Or if you make any other acquisitions or anything?
Yeah, we're debating that internally, but in all likelihood, there'll be a trading update sort of towards the end of January, after we've traded through the peak Black Friday, Christmas, and we'll update everybody then. So yeah, I think that's the plan.
Yeah, I think you'll see some more RNS for us, Paul. That's the hint as we announce more distribution growth, new categories, and how we're supporting it. And then, yes, I think we'd love to update the market as early as possible in January, because we'll be able to see everything very, very clearly, particularly with these questions about what's happening in Europe and how that will progress. So yeah, no, we expect to keep updating the market, our investors, in our progress and updating on how we're trading.
We've certainly whet my appetite, so I look forward to touching base again in a couple of months, and best of luck over Christmas and certainly Black Friday. So thanks very much for your time, gents.
Good to see you,
Thanks, Paul.